From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 19th, 2018. Today we're going to take a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. We're taking a look at the blue shaded area at the very top of the chart. We're looking somewhere near the 8,010, 8,030 level, highlighted in blue. You can see over the past 3 days the market finding resistance into this level, top right hand side of the chart where the black box is, the blue shaded area. 3 days finding resistance there. But not only there, you look back to the left hand side, you can see the blue circle, green circle, both of those periods seeing multiple days finding resistance into this blue shaded area. Sure, we saw the market challenge higher at the blue circle above to the green zone, but the key point here that I'm trying to make is significant resistance has historically been found just above the 8,000 level between 10 and 30. So what we're watching for today is similar scenario. We're looking for resistance here into the blue zone. One of two things is going to happen at this blue shaded area between 8,010 and 30. It's either going to break it and go higher. History tells us that if it gets above it, the potential is for it to go to the green zone. So we're watching for signs and indications of a breakout. I don't think we have those, of course, currently right now for the Australian dollar. Second thing we look for is signs and evidence of reversal. You know, that's what our job is as individual Forex traders, is to look for clues and evidence to what the Forex market is doing. We don't have control over what's happening. If we did, we could just say go up or go down. We don't have that control. So what we need to do at these significant decision zones where the market has made trading decisions before is look for evidence to what the real market is doing. The people that are controlling rising and falling, bullish and bearish movement, what is the evidence that points to what they're doing? So as it reaches this significant decision zone, the blue shaded area, we're looking for evidence, a breakout to go higher or signs of evidence of reversal to go lower. We can use Japanese candlestick price action to do that. You know, a breakout, we have specific patterns for breakouts. Open or close above the 8,030 level increases our confidence it's going to go higher. Japanese candlesticks also could give us a clue to reversal. We look for signs like a shooting star candlestick, a doji, or a bearish engulfing candle, those types of formations that improve our confidence that it's going to have reversal. But again, none of those are a guarantee. We just look for evidence that points to a potential outcome, and that's what we look for. And when we're looking for that, we look for it around these significant decision zones like I have highlighted on my chart. So one of those two things is going to happen today. So we look for signs and evidence of that. Of course, we can use other indicators to do that as well. We zoom it in a little bit. Of course, we are at the very top of the trend. I often have a difficult time suggesting buying at the very top of the trend because remember, buy low, sell high. If you're going to buy something, you'd rather buy it at a lower price. So preferably, if we were going to buy it, we'd actually like to see the market take a little bit of a dip back down here to the bottom of the black box, the pink shaded area. How do I know that? Look at the blue box. It found resistance at the orange zone, fell back to the yellow zone, found support, and then broke out and went higher. Right here is the sign that we would see a breakout. We haven't seen anything like that above the blue zone. You know, here we have the market, a clear candle above the orange zone. We don't have anything like that above the blue zone. So preferably, if we're buyers, we're looking for one of two things: a dip back to the pink zone or a break above the blue zone. That's, of course, the clear evidence that we would look for a buy in the direction of the uptrend. Otherwise, selling from the blue zone carries some potential back to the pink zone or further reversal if it breaks through the black trend line and the pink shaded area. Take it down to the 4-hour time frame. Really won't change that, but we can see what the market's been doing for the past several hours, challenging into the blue zone. So far, again, no real breakout above the blue shaded area. We don't really have any significant sign of reversal of some influence or influx of sell orders. We would typically look for that. Like I said, maybe the shooting star hammer candlestick or a bearish engulfing candle. Even the market just getting back above back below 8,000 might give us a little bit more confidence in that. So one of those two things: we either need to get above the blue zone to go higher, give us increased confidence that it's going to go higher, or signs and evidence of reversal reversal, that it's going to go back down. That's what we're going to be watching for today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.